Markets stay afloat amid mixed virus updates. Investor sentiment has improved this week as omicron-related fears ebbed, with reports of symptoms being less severe, boosting risk appetite across markets. Asian stocks gained despite highly indebted property developer China Evergrande being on the verge of default after a missed debt payment. However, European equities turned lower on Wednesday, sending the stock 600 down 0.6%. France, the UK, and Germany had announced that restrictive measures amid an escalation of contagions in Europe. In the UK, Boris Johnson noted that the number of new cases are doubling every 2 to 3 days. Of note, the new variant has now been found in 50 countries and 19 American states. US stocks are mostly higher on Wednesday, but the bullish momentum has slowed after a 2-day rally. Earlier, markets were boosted by reports that Pfizer and BioNTech said that 3 doses of their vaccine are effective at neutralizing the Omicron variant. Still, Pfizer stocks finished 0.62% lower overnight. On the data front, the U.S. Labor Department said that in its JOLTS meeting that the amount of workers who left their jobs in October fell by 4.7%, while the level of job openings accelerated 4.1%, just below its all-time high. The Dow Jones Industrial Average reversed marginally higher after the end of the session to close up 0.1% higher, and the S&P 500 inched 0.3% higher, and the tech-heavy Nasdaq Composite rose 0.6%. In individual stocks, Apple shares were 2.2% higher after UBS maintained its buy rating on the stock despite recent concerns about iPhone 13 demand. In currencies, the dollar was relatively steady at the start of the week. On Wednesday, the greenback gained during the European hours but finished the day down against most major counterparts despite government bond yields extending gains to fresh weekly highs. In a wider picture, however, the U.S. currency continues to derive support from the notion that the Fed may speed up tapering next week. Amid new restrictions in the UK, the pound sterling US dollar plunged the fresh 2020 low of 1.3163 to trim intraday losses to 1.3200 figure, eventually due to a weaker dollar. Meanwhile, the Euro USD rallied above the 1.1300 handle and advanced to the 1.1350 region. However, the bullish potential remains limited as the Fed rate hike chatters has renewed expectations for firmer inflation. Meanwhile, the gold keeps ranging within familiar levels, now trading around $1,786 a troy ounce. After rejection from the $1,790 area, the precious metal has finished lower on Wednesday, while regaining a slight bullish bias today. The bullion still remains below the $1,800 figure and could stay on the defensive amid rising hopes that the Fed will likely accelerate the reduction in bond buying next week. On the other hand, markets remain cautious ahead of incoming Omicron updates worldwide. This in turn helps limit the downside pressure surrounding the yellow metal. Asian stocks are mostly up on Thursday, with investors digesting the latest Chinese inflation data. The impact of the new Omicron variant on the economic recovery remains in focus as well. China's Shanghai Composite was up 1.05% after the data showed that consumer price index grew 2.3% year-on-year and 0.4% month-on-month in November, the fastest pace since August 2020. The producer price index grew 12.9% year-on-year. On the negative side, Japan's Nikkei 225 edged down nearly 0.5% after a strong magnitude 6 quake jolted the Tokara Islands in the Kagoshima prefecture. In Australia, the S&P ASX 200 inched down 0.3%, while South Korea's Kospi gained 0.54% on Thursday, a day after the number of COVID-19 cases in the country exceeded 7,000 for the first time. In other markets, Bitcoin dipped back below the $50,000 psychological figure on Wednesday, staying under pressure today. The largest cryptocurrency by market capitalization struggles to see a more solid recovery as demand looks modest at this stage. On the other hand, as long as investors defend the 200 DMA support level, currently at $46,500, a further bullish correction can continue in the coming days. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.